Get ready for a big week as we talked about Friday. This is a really big week in the mortgage-backed security world. We have a couple of reports that are coming out that are going to be pivotal in where mortgage rates are going to go in the coming months. Welcome back to the Brent Bruce Daily for November the 7th, 2022. It is now 2:37 p.m. Central Time. And what I'm talking about here is the midterm elections that they're so highly anticipated, are going to be tomorrow. Now, that is going to be very important. And I think we're going to see some volatility in the markets one way or the other as we start to hear the results coming out into the evening. And then, of course, on Wednesday. Now, right after those reports come out and we digest those just briefly, on Thursday, we have the Consumer Price Index coming out reporting October's numbers. Now, we talk about that very often here on the Brent Bruce Daily, that the CPI, the Consumer Price Index, as well as the PCE, the personal consumption expenditure, is what we're really looking at to gauge inflation, and understanding that inflation right now is the number one market mover or interest rate mover. So it's not the Federal Reserve that is causing home loan interest rates to go up. It's inflation that is causing interest rates to go up. So the Federal Reserve is having to increase their federal funds rate to try to get inflation to come under control. They are happening at the same time, but they're not happening. People aren't understanding that the Federal Reserve is not controlling the mortgages. The mortgages are going up, which is why the Federal Reserve is having to jump in and do something about it, because it's inflating not only mortgage rates, but prices everywhere. So what number is it that we're looking for here on Thursday? Because there is a specific number that we're watching for. Okay, so if you watch the reports that I put out, let me jump over here. All right, so we put this type of report out pretty often, and this report comes out the compliments to MBS Highway. They do a great job in putting reports out that we follow really every day. So MBS Highway has produced this for us and provided it. What we are looking for is each of these numbers is the month over month increase or decrease to core consumer price index. So that means that it's the CPI report, the General Consumer Price Index report, minus food and energy, which is why it's called the Core Consumer Price Index, which is the number that we really like to pay attention to. Now, what we need is the new October reading. So we've already gotten September. So we're going to get over here. We're going to get our October reading on Thursday. We need that October reading to be less than last October's reading. Okay, so go back 12 months. Last October's reading was 0.6. So we need the number to come in at lower than 0.6. If it comes in lower than 0.6, then not only will the month over month reading be lower, but also the year over year reading will be lower. And that will be an indication that inflation is subsiding. Now, understand these numbers, like when we see a 0.6, that means that in general, the items that were being monitored that are in this basket of goods, as they say, if you went to the grocery store and you filled up your basket and added it all up, and again, I say grocery store, but we're talking about gasoline and groceries and housing and energy and all kinds of things that they pile into a basket, and they see what that inflation reading looks like on all of those items that was in that basket. That is called the headline reading. It's all of the items in the basket. The core reading takes out the food and energy components of that basket of goods because they feel that housing and energy are too volatile, which it is volatile. I don't know why they want to take that out, because it is things that we're paying for, right? So this number here, the 0.6, is a month over month reading. That in the last month, for instance, a Snickers bar went up by 0.6% in cost. Okay, so understand that if when the report comes out and we get a 0.4, a 0.3, even a 0.5, that doesn't mean that the cost of these items is less. It doesn't mean that the cost of that Snickers bar went down. It means that the cost of that Snickers bar increased slower. Okay, so the inflation wasn't as fast. It slowed inflation. Because understand that our economy, the consensus is that our economy needs to have inflation of about 2% per year. That is considered healthy. So healthy inflation is 2% per year. But you can see right here that the core consumer price index was at 6.6% as of the September's reading. We need that number to go down. We need inflation to slow and head in the direction of 2%. Get away from that 6%. That's why it's so important to pay attention to the report that's coming out on Thursday, because if it shows that it comes out with a core month over month, that's what you need to be listening for, a core month over month reading of more than 6%, then that means that inflation readings, at least the reports, are showing that inflation is still getting hotter. Not just as hot, but getting hotter. Like it's even becoming faster inflation. And that's when the Fed and everyone that is involved in items that are affected by inflation, like mortgage-backed securities, which is home loans, they're not going to like that. And they're going to see it as a concern. And all of a sudden, the Fed's going to have to act more aggressively. Home loan interest rates and bonds are going to get more expensive. Okay, so understand that is how this works. Let's take a look at where we are on our charts just briefly before I jump over to the Brent Bruce daily interest rate. So let's go to our chart. We're down 20 basis points today. Probably understandable considering we need to be somewhat subdued in front of such a huge thing as a midterm election that is going to be happening tomorrow. So many people are just kind of like, ooh, let's just hold on and let's see how the midterms come out. So we're down 20 on our mortgage-backed security. We're up 6 on our 10-year. Man, convincingly and holding on strong to 4.2 over that 4.0. That is the number that I really want to see us get below that 4.0. I'll kind of do a little dance when that happens. Right now, we're still in this wide trading zone here on the mortgage-backed security charts. Where are we on the Brent Bruce daily interest rate? Now, as of last week, Friday, we said that we were at 7.125. But it only cost, $600, if I remember correctly, to get down to 6.99. Here we are at 7.125. Let's open this up. Right now, United Wholesale continuing to dominate. For $223, you're at 6.99. Okay, so for 1 point, you're at 6.625. Think about it. And for just about 2 points, not even 2 points, 1.7, you're at 6.375. So remember, when you're hearing advertisements from any other lenders, if their rate is lower than mine, most likely, almost guaranteed, they're charging points and they're just not mentioning that because my rates are going to be lower. So if we were to charge almost 2 points, we're at 6.375. 1 point, we're at 6.625, and paying $223, we're still at 6.99, which is excellent considering the last couple of weeks that we've been seeing mortgage-backed securities not really playing the direction that we want to see them go. So let's just do one more thing here before we finish up. I want to make sure I always show the parameters that we just priced out. Okay, these are the parameters that we just priced out. So everyone understands. And that is not, there's no other points or other origination fees or anything like that. Those are our real numbers. Make sure that you reach out to me if you have any questions, if you'd like to talk through any of this. Make sure that you like, subscribe, and share to the YouTube channel. If you know of anyone else that would like to get this information, let me know. I can add them to our distribution list. And again, use me for a resource, and I will keep you posted. We are hoping for a consumer price index number of below 0.6 on the core reading month over month. Keep that in mind. Make sure to keep you posted. Have a great day.